evening and welcome to the Money Show, your daily guide to making smarter, sharper and more secure financial decisions. I'm Kavita Thapliyal and I'm here to help you take control of your money one conversation at a time. Whether you're planning your retirement, investing in mutual funds, building or buying your first home, or just trying to make sense of market noise, this is the show that puts your financial goals at the center. From SIPs to stocks, loans to life insurance, budgets to Bitcoin, we decode the jargon, simplify the strategy and empower you with insights you can trust. Because when it comes to your hard-earned money, there's no room for guesswork, only informed, intentional choices. That's right. So stay with us, because at the Money Show, your financial freedom is not just our topic, it's our mission. And you can also be a part of this show. All you have to do is just send across your questions. If in case you have any financial portfolio related queries, any question about your financial goal, you can WhatsApp us your queries on our WhatsApp number, which is 865-797-4571. We also have an email ID where you can send across your queries. The email ID is themoneyShow@etnow.tv. All right, so let's begin the show. And okay, so we will be talking about the AMFI numbers over here in the beginning. And as we all know, the numbers are out, and let's decode the numbers more. I have with me Sunil Subramaniam, market expert. Sunil, hi, good evening and welcome to the show.
Hi, good evening.
You know, because we are also talking about AMFI numbers over here, Sunil. I want to understand, because we've seen a 22% fall in equity inflows. You know, the number is around 19,013 crores. Now, how do you interpret this kind of a sharp fall? Is it just profit booking? How should we look at it, or do you think it's something deeper?
No, I think you said right, it's profit booking. So let me explain this. Give me a couple of minutes to decode this data for you, okay? So first of all, as you correctly said, the net numbers are 20% down. But the net is basically gross sales minus redemptions, right? And if you go and analyze it, and I've analyzed the AMFI data month on month from a gross sales perspective too, and I'll tell you something, that gross equity sales is flat month on month. Okay, it's the redemptions which are up 5,000 crores over previous month. Why I say this is, there's one set of investors who are investing and another who are redeeming, who have invested years ago, who have made some good profits from the market. Maybe they have their needs coming up, or maybe they feel that is a good time to take some money off the table. So it's a spike in the redemptions by 5,000 crores, which accounts for your 20% drop. So the entire drop, which is about 5,200 crores, what the 20% means, from 24,000 to 19 odd thousand, is entirely due to a spike in redemption. And that, I feel, is a healthy phenomenon, because unless people who are investing enjoy the profits and don't just look at the NAV and look at the paper profits, they're actually booking profits, cash off the table. That's a healthy sign for a developing capital market. It means the people are enjoying the fruits of their investment. So I don't see any cause for worry, because month on month, if you take the gross sales, they are about 56,700 crores flat. That's one point of view. The second point I want to make across here, as you know, in the middle of the month, we had the Indo-Pak skirmish, right, for 3 days. Naturally, there's a bit of panic around that. So what has happened is people who are investing in haven't panicked. Some people have booked profits, but they have diverted that money into hybrids. So I think what happens is that headline, we look at only the pure equity mutual funds. But to a customer, the equity-oriented hybrid category, whether you have balance advantage funds, you have multi-asset funds, and you have the aggressive hybrid funds. All of these are there. Now, the problem there is that the data includes arbitrage as a category, and because arbitrage is an institutional product, it's a substitute for liquid funds, because it's a more tax efficient way of short-term parking. So what you need to do is you need to take away arbitrage from that to understand the retail mindset. And I have done that work also. And believe it or not, month on month, there's a 20% rise in the hybrid category. So to a customer, he puts it in pure equity or hybrid based on his outlook for the market. So in a time of volatility, actually 2,000 crores more has come in gross sales into the hybrid category. And in terms of net, that is your redemptions also have actually come down in the hybrids. So net about 2,500 crores of additional money has come into hybrid. So remember, I'm taking away arbitrage from the hybrid number. So now when you add the two, yes, the numbers are down a bit, but overall gross flows into equity and hybrids is up 3% month on month. So I don't see any cause for worry. Some people, what they've done, they've booked profits from their existing equity investments. Some people, what they've done, they've reallocated that money from
So,
a pure
right,
equity fund to a hybrid fund,
right.
which is very smart thinking in a
So,
volatile time
Sunil,
frame.
exactly. So, this sir, exactly. So, if it is not something to worry about, we also want to understand the investor behavior, which you've been stressing on. Also, if we look at a divergence, in lump sum flows which are weakening, would you be calling it an HNI shift in investment strategy? Because SIP inflows are intact. Also, one more thing, large cap fund inflows have fallen over 50%. Now, is this a lack of faith stability, focused funds, the lack of faith over there, or are investors simply chasing alpha elsewhere? How can we interpret this particular action for retail investors and for HNIs?
So, Kavita, again, I draw your attention to the fact that the SIP number is a part of the gross sales. It's not a part of the net sales. So, as
Right.
a gross sales month, the last month was 56,750. This month was 56,600. So, there is no drop in the lump sum and increase in the SIP. It is roughly the same. The SIP book is roughly the same. The gross sales are roughly the same. It is a redemption of the older investments which has caused this drop in net flows. So there's nothing to read here. There is no change in the behavior. In fact, I would say that diversified funds, which is large cap, flexi cap, multi cap, still account for 50% of the gross flows. Sectoral funds account for 20% and the balance is mid cap 12% and small cap 11. I'm talking about gross flows, mind you. So the right way to look at it is in terms of gross flows. So there is no cause for worry because the proportion of the SIP is roughly the same as the percentage of gross sales. Only when you look at net, it looks like sharp difference. So please, I would encourage all your viewers not to get worried about this. This number of SIP flow book is going up month on month. The SIP gross flows minus SIP is about 1% down because total gross flows are about 0.3% flat month on month. So there's absolutely no cause for worry. This reallocation that you're seeing in terms of a large cap drop is the net side. People booked profits there. And I'll tell you where they have booked profits the most. They booked the most profits. That 77% rise in redemptions was in the value funds. So as you know, value had a very good run over the last few years, but now people are clearly saying that this is the time when valuations are fairly rich. So the value has probably had its play. So some people are booking profits in their value funds. So value funds, for example, last month's redemption was about, I'll give you the exact number, 1,600 crores. This month is 3,000 crores. So there's almost 1,300 crores increase in redemptions in the value category. That accounts for a significant proportion of the drop. So on a gross sales basis, month on month, equity sales are flat. SIP book has grown. So I'd say that the customer has remained strong and sensible in this period. They have just allocated a little more to the hybrid category, which is less volatile in a time when the Indo-Pak war was there. But overall, customer confidence in India's story remains intact.
Right. One more question. AMFI data shows a rise in cash holdings across fund houses, around 2.15 lakh crores. You think fund managers are playing it safe or timing a correction, or you think it's not that of a big figure for us to even talk about?
So this was actually 2.5%, 2.62% the previous month. It's come down to
Right.
2.15%. This month, actually, DIS, in the month of April, they had built up cash balances because the domestic earnings season was not completed. Now the earnings season being completed, they have clarity, and the earnings, the year-on-year earnings show fairly healthy for mid cap and small cap. So this month, actually, domestic fund managers have started deploying. So 2.1 or 2.62% to 2.15. So the about 35,000 crores of cash of last month has been deployed this month. So I think domestic fund managers have started deploying, and that's the reason, despite some FII withdrawals, we have seen that the market has been fairly healthy and sticking around the 25,000 mark. So I would say actually domestic fund managers are reducing their cash balances gradually as now there is clarity. But for a further reduction, we probably wait for the BTA clarity to emerge because on sectors likely to be impacted by the BTA, fund managers are still cautious. So as and when a BTA signing happens and you get clarity around sectors, the rest of the deployment should go through.
All right. Great. I think that will be all for the show today. Thank you so much for being on the show and helping our viewers understanding every aspect of these AMFI numbers. Sunil, thank you so much. I mean, it's a great sign that nothing to worry about, and in fact, investors have become smart enough to, reallocate and revamp their portfolio with different strategies. But then we move on and let's talk about